Since taking the reins from John Chambers 2 months ago, Robbins has presided over a successful financial quarter. But with the backdrop of global market volatility, he's also made it clear that there are going to be some major changes to Cisco's business model. I spoke with him earlier today, and we started by talking about his vision and Cisco's latest quarter, his first as CEO.
Well, you know, if you think about what just occurred, Emily, in Q4, we had a record quarter. And as I've said that to people, they sort of go, okay, you had a record quarter. But I have to remind them that in the 30-year history of our company, and over the last few years when it's all been doom and gloom and everything's going to disrupt us, we actually had the biggest quarter in the history of the company. So I think, you know, our solutions are relevant to our customers. They appreciate our innovation. But if you really think about what's transpired, is we have 15 billion devices connected to the internet today. And we believe by 2020 there'll be 50 billion devices. And Salesforce this week said 75 billion, so hopefully they're right. But either way, it's a big number. And then by 2030, 500 billion devices. So when you think about this massive connectivity and the distributed nature of that, we think that's right in our wheelhouse.
It's been growing the top line in, lower single-digit percentages, and analysts say that's going to continue. What do you see? What do you think you'll deliver?
Well, I think we have the opportunity to continue to grow. I think we can grow faster, and I think that with all the connectivity that we see coming on, I think that they'll have to judge us for our results.
How much faster?
Well, we'll have to see.
So, we're talking about the global landscape. We're anticipating a decision from the Fed tomorrow about whether or not to raise rates. How is Cisco preparing for an environment in which rates may be potentially higher? Do you have ample cash? Will it affect M&A?
I think we definitely have ample cash. I think that what you're seeing right now with the markets, when things get tougher, that's actually good for us because we have great strength, we have great balance sheet strength, and typically when there are challenges, we actually gain market share. So while we don't want to see that, it tends to be good for us, and some of the valuations may become more rational as well. So,
what do you think about valuations right now?
Well, I think that the private markets have a different perspective on valuations than the public markets do, and I think that you're going to have to see some normalcy come back into that over the coming quarters.
So Cisco has historically been very acquisitive. You've used a lot of stock to buy companies. Do you see that continuing? Do you think you'll be more or less acquisitive, and in what areas?
Well, if you think about how we drive innovation today, we have almost 20,000 patents from our own R&D. We do acquisitions. We've done 180 of them. And by the way, 90% of the employees are still with us after 5 years. So that's very positive. You look at what we did with SourceFire. That's a core part of our security. The Meraki business that we bought, that was $100 million booking run rate when we bought them. And we exited Q4 at $1 billion run rate. So they've been very successful for us, and we'll continue that. And you can see us, the areas of analytics, of cloud, of security, all the areas that are important to our customers.
That's where you think you'll be more acquisitive. Now, you mentioned that tech giants, they need to adapt in this new environment. We just saw HP. They're laying off 30,000 people. So these companies are making painful choices. Microsoft's had layoffs. Cisco's had layoffs. Yes. How happy are you with the size of Cisco's current business?
Well, I think that, in the case of HP or Microsoft and others, we all have to make the tough decisions relative to our own business. What we believe is that coming off a record quarter, that the pace of change is going to require us to manage our business more effectively. So what we look at, what we're thinking about, are more portfolio decisions. What I don't want to do is put the company in a position where we forward invested too much so that we have to take a large action, and that's what we're going to try to avoid. So we're going to try to drive productivity. We're going to take advantage of the technology that we're positioning with our customers to completely digitize the company, which we think will make us more efficient, greater productivity. So we're very comfortable with that.
So do you see more layoffs in the future, or?
What we do is we look at geographies, and those that are performing well we invest in, and those that are struggling we have to adjust our expenses appropriately. We look at product lines that either aren't performing or are no longer relevant to the customers, and we have to adjust our expenses, and those will be the primary things that we'll continue to focus on.
So, Cisco, as you've mentioned, is a truly global company, lots of different geographies. What do you think about the broader market volatility that we're seeing here and in China? How concerned are you?
Well, if you look at what's going on in the emerging markets, as an example, China and Russia have largely been geopolitical issues to date, and now there's economic concerns, obviously, in China. We've got Brazil that's been a challenge, and then you have Mexico and India that have performed really well for us. And, we focus on what we can control. I know it sounds a bit like a cliche, but that's really all you can do. And then we will respond and adjust based on what's happening in the world.
One last question. Meg Whitman told me she sees a lot more consolidation in the tech industry, given what's happening more broadly. Do you see that as well?
I think there'll be significant consolidation in the tech world. I absolutely do agree with her there.
How so?
I think what you're finding are that customers are looking for the business benefit of the technology. They're looking to get to the outcome faster. And so in order to do that, we have to bring these architectures to life. We have to bring the solutions to our customers in a way that work and provide benefit immediately. And so I think a lot of the smaller niche players are going to have a challenge with providing a box because it doesn't really get them to the business outcome. So I think that and our customers' expectations and the pace of change are all going to lead to tremendous consolidation.